Good evening, sir. Good evening to all. Today is the third day of special lecture series program for undergraduate students on finance and its allied areas, organized by Kolkata Bidhannagar Society for Academic Advancement. Today we have Sandip Bhattacharyya sir with us. He is Assistant Professor of Department of Commerce, THK Jain College, West Bengal, India. And today's topic of discussion is set off and carry forward losses. Over to you, sir.
Thank you, sir. So, greetings to one and all present over here, esteemed fellow members, colleagues, and my dear students. It's a privilege for me to stand you before today to share some thought about the taxation areas. As we know very well that the taxation is a subject which may affect us all, whether we are in a capacity of individual, whether in a capacity of businessman, whether in a capacity of the business person, whether in a capacity of the assessment of person, whether in a capacity of the assessment of firm, and so on. So, taxation is not merely about the numbers, but also it is in rules and regulations and different provisions under the Income Tax Act 1961. So, in this connection, I would like to appreciate Kolkata Bidhannagar Society for Academic Advancement and entire organizing team with the joint collaboration with the Azure Academic Services for conducting such a wonderful session for the betterment of the undergraduate students of pan-India level. So that as we are embarking our journey together, so that we can say that I encourage you to approach this topic with a very curiosity and your openness of mind. So this session hopefully is not just imparting of our knowledge, is not just importing of our knowledge, but it's about fostering our creativity. It's about fostering our critical thinking ability. So let us begin our exploration of taxation, a subject which can impact us all. So, without any further delay, I would like to share my screen to discuss our today's topic. So, our today's topic is practically a set off and carry forward of losses under the direct taxation area. So, let me share my screen and then we will follow it. So, in this session, what we are going to discuss. So in this session, practically we are going to discuss how can you adjust your different income or losses with the current taxation or financial structure given by Ministry of Finance. So you know very well, before I start my presentation, you know very well that in taxation area, we are having direct tax and indirect tax. If we are supposed to comprise with the direct tax, then we can say that our income may be classified into 5 different heads of income. Number one, it is income from house property. Number two is income from salary. Income from profits and gains from business and profession. In short, it is PGBP. Number four is the income from capital gain. And finally, but not the least, it is income from other sources. So that these are the 5 heads of income. So that by clubbing these five heads of income, we will get gross total income. But just to think about it, in every and each of financial year, I hope, my dear students, that all
Excuse
of
me,
you
sir.
are. Yes, sir.
Your slice has not changed.
No, no, no. I am not currently changing. I am just the. I am just
Okay,
give
okay,
the
okay, sir.
intro,
Okay,
and then
okay,
I
sir.
will move
Please
to my
continue.
slides. Okay, sir.
Okay, sir. Thank
So,
you.
my dear students, before I start my presentation, that you know that we are having five heads of income. That is income from salary, income from house property, income from PGBP, income from capital gain, as well as the income from other sources. But just think about it. In one particular financial year, or in each and every financial year, apart from income from salary, is it necessary that you are having income only? If you are supposed to doing a business, suppose a grocery business, textile business, whatever be the business you are having, I repeat, apart from salary, because in salary you are having only income. Is there any loss from salary? Unless and until the job will be quite off. But the think about it, just income from business or the income from capital gain. These are the main sources of loss. You are having one particular business. Now in last financial year, you incurred income. But in current financial year, you are incurring losses. Now, if you are having your income, then you are supposed to pay tax. But if you are incurring losses, what to do? Is there any provision to adjust my loss? Yes. As per the Income Tax Act under direct taxation, there is a provision of adjusting of losses, but to some extent to complying of some provisions. So then what are the provision? We will move to our slide. But just to develop your background, that is, my dear students, I am not only to say that I am having income from my business. I am having income from the capital gain. No, I am supposed to incur the losses. So that if I am incurring the losses, so that what to do? Is there any provision to adjust? Yes, my dear students. There is a provision to adjust. And this adjustment is called, now I am moving to my slide, that is set off and carry forward of losses under the direct taxation level. So that first is the set off and second is the carry forward. So that what does it mean, sir? So that what do you mean by set off? Or that what do you mean by carry forward? We will move to. But if you are having income, you have to pay tax according to the tax level, or that according to the tax slab, whether you are under in an old regime or the new regime. That's a different thing. But the thing is that if you are incurring losses, same will be adjust on your income. But how to adjust, we will comply with to the later on. But so that income and loss both are simultaneously adjust. So this is our today's topic, that is set off and carry forward of losses. First one is set off, then another one is carry forward under the direct taxation. Because you know very well, just the beginning of my lecture, there is a two set of provision. One is the direct tax, another one is the indirect tax. Today we are going to discuss the direct taxation, and that under the direct taxation, one very important area, that is set off and carry forward of losses. Now let's move to the set off and carry forward. Now what do you mean by set off? So that set off and carry forward, these two are two different things. First one is set off and the one is carry forward. So first you can adjust, so that first you can understand, sir, what is set off? So set off is particularly refers, as you can see my slide, I am not just telling that what is written in my slide, because What I have written in my slide, it is shown on your screen. I am telling the background. I am telling the explanation. So the setup means how to adjustment of losses against this some sort of eligible profits or income. So setup means that how to adjust or how you can comply with your losses against your income. Just take for an example, my dear students. Just take, that is, income from salary is there. Because I told you at the beginning of the session, the salary income is having only the proper, only the income level, no loss unless and until job will be lost. So that there is a set of losses. That means suppose you are having income from salary. At the same time, you are having loss from your capital asset. That means you are having, that means suppose you are a salaried person and you are having income from salary for one particular financial year. But at the same time, you are having some losses from your capital asset. That is either the long-term capital loss or short-term capital loss, because you know very well, my dear students, there is a long-term asset, there is a short-term asset. So that suppose you are having the long-term capital loss. Now, how to adjust this loss with your income? This is called set-off. Now, what are the rules or what are the provisions that we will discuss in the later on. But first, set-off means that is a loss may be adjusted with your income, because our objective is what? Because our objective is try to reduce my tax burden in a provision given by income tax department. Our objective to reduce my tax liability as in the tax planning given by the income tax department. I am taking the eligible deduction, I am taking the eligible losses, and simultaneously my income will be reduced. So that if my income is reduced, then automatically my tax burden will be reduced, because tax is calculated on the net taxable income. So I hope setup means, that means refer to the adjustment of losses against the profit. It will be clear understanding in your background. Just to definition of setup. Now, setup may be governed by under section 70 and 71 of the Income Tax Act. Now your question probably, sir, what has been complying with under section 70, 71? Hold it, my dear students. We will move to the right. So now you can see this is set off. One is called intra-head set off. Another one is called inter-head set off. Now, very, very interesting one. Under section 70, as my previous slide, under section 70 and 71, just we have seen in my previous slide. Under section 70 refers, that is intra-head adjustment. And under section 71 refers, that is inter-head adjustment. Now your question, my dear students, sir, what is intra-head or what is inter-head? Very easy. Intra means same head of income. Sir, for example, yes. Sir, example, it is suppose you have incurred losses from your textile business. You are having two business. Suppose one is grocery business, another one is called textile business. And from grocery business, you are having profit. And from textile business, you are having some losses. Now your question is said, how can you adjust textile business loss with the grocery business? Because there is a two different kind of business. One is grocery, another one is textile. My dear students, if I am having two business, one is grocery and one is textile, it will be come under one heads of income under the main channel or the main five heads of income, that is income from profits and gains, business and profession. I repeat this once again. Income from grocery and income from textile. Both are the two separate business. Your question probably, sir, how can you adjust textile business loss with the grocery business loss? Yes, my dear students, I can adjust because as per my provision given by income tax department, because both are come under the one umbrella, under the heads of PGBP, that is profits and gains from business and profession. So that in that case, I can easily adjust my profit from grocery business with the loss from textile business. So just you can see under the intra head, within same heads of income. That means business loss can be adjusted with the business income. Business loss can be adjusted with the business income. House property loss can be adjusted with the house property income. Capital asset loss can be adjusted with the capital asset income. Other sources loss can be adjusted with the other sources income. That means the same head of income, but this will be not complying with the salary. Because I told you, in salary, we will never have the losses. So, apart from salary, the four heads of income you can adjust with the same head if there is any income or losses. So that this is called under the intra-head adjustment. I hope, my dear students, it is clear to all of you. Next, I will move to the inter-head adjustment. It is very, very crucial one. Intra-head is comparatively much more easier. If you are having income, you can adjust the same head of losses. But sir, inter-head, that means, you know, inter-college championship. What does it mean? That means one college versus another college. Suppose inter-university, one university versus another university, same thing. Inter-head, one head versus another head. So that intra means same. Inter means different head. That means house property loss. Suppose I am incurring loss from house property. So house property loss can only be adjusted with the house property income. But my dear students, if I am having only one house property or two house properties, and there is no other income from any house property, so that what can I do? I am telling that if I am having one house property and from that house property I am incurring losses, and there is no other house which I can adjust my loss to this house property. So my dear students, what can I do? How can I adjust these losses? So I will move to the another heads of income, that is apart from house property, whether I am having salary, whether I am having business, whether I am having capital gain, whether I am having other sources, whatever I am having, I just move to the other heads of income and try to adjust my losses according to the provision complying with the income tax department. So this with the under section 71 that I have written with other heads of income. So that intra, just to take a synopsis up to this, set up means adjust. Adjust to what? Adjust of losses against the income. It was governed by 70 and 71. Under section 70, it is intra, that is same heads of income. Under section 71, that is inter, that is a different heads of income. Now we will move to my next slide. So just you see under section 70. Now I am giving the explanation. This is a very synopsis that is under section 70 and 71. Now we will move to one by one. So that under section 70, means this is intra head or inter source of adjustment. Now I am writing intra head or inter source. That means setting of losses, as you can see in my slide, setting of loss of one source against income from other source within a same head. Just I have given the example, that is loss from one self-occupied house property can be set off against income from let out house property. Now, what is self-occupied, or that what is let out? Self-occupied means that is an owner is using for its own, and the let out, that is the relationship in between tenant. That means a relationship exists in between the tenant and landlord regarding the fare, regarding the rent, so that we can see that the loss from self-occupied house property, that means used for your own purpose, that means assessee using at your own, can be set off against the income from let out house property. At the same time, any sort of business can be set off with the another sort of business. For example, I have given that is the textile business loss can be set off with the leather business profit. So that this is called intra-head. Now, just see one example I have cited. These are very basic example. We will do at least 2 to 3 some in this session, but it is just a very basic example. You can see income from house property 1, that is 4,50,000. Loss from house property 2, that is 3,25,000. Taxable income from house property. So that income from house property 1, that is 4,50,000, minus loss from house property 2, that is 3,25,000. So that what will be my taxable income? These are very easy example, my dear students, but this is the beginning for your understanding, so that you can understand it very much clearly, because we will do some intermediate sum in this session, so that you can easily understand that the how much taxable income we have to calculate. So that just to see this example, that is income from house property 1, it is 4,50,000, and that loss from house property 2, it is 3,25,000. Just please do listen. Please do listen, my dear students. That means we are having intra-head. Means intra means same head of income. Now you can see that I am having income from the house 1, but at the same time I am incurring losses from the house 2. So that what is my taxable income? It is 4,50,000. No, sir. No. As per the Income Tax Act, they are giving me this provision that you can adjust your loss against the house property income. Because I am having two houses. One is profit, another one is loss. So that the ultimate, the compile, ultimate, the aggregate income from the house property, that is how much? 1,25,000. But students, one thing you must be appreciate, that if we are having no provision against set of losses, if we are having no provision against the set of losses, so that we are supposed to pay tax on full at 50. But 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 we are very much fortunate that we are having some provision to set off these losses, that is 3,25,000. So 4,50,000 minus 3,25,000, that is our taxable income reduced to 1,25,000. Now you can see that our taxable income is reduced 1,25,000. At the same time, you can see that profit from business A, it is 5 lakh, and the loss from business B, it is 2 lakh. So that what will be the taxable income from business? That is the profit from business A minus loss from business B, and it will be rupees 3 lakh. So that if I am saying that what is my income, I am having house property income, I am having business income. I repeat this once again. I am having house property income, I am having business income. Now, if someone supposed to ask me, sir, what is your income
Hello, sir.
for this current? Yes, sir.
Can you please hide the googlemeet.com in sharing your screen?
Okay, okay, okay.
It is not visible, the
Okay.
numbers.
So
Thank
that
you,
it is
sir.
okay, sir?
Yes, sir. Yes, sir. Please.
Okay, sir. Okay, sir. So now, if I am having the house property income as well as if I am having a business income. Now, if someone supposed to ask me, so sir, what is your taxable business income? So my taxable business income is rupees 3 lakh. But if someone supposed to ask me, sir, what is your total taxable income? So my total taxable income is house property income plus business income, because no other heads of income I am having. There are no other heads of income. What are the other heads of income apart from these two? That is salary, that is capital gain, and the income from other sources. I am not having. I am not having salary. I am not having capital gain. I am not having the income from other sources. Only I am having income from house property and the income from business. So, my dear students, you must appreciate the set off and loss provision under the income tax department. So, I move to my next slide. So, this is the rule. Now, I am citing rule number 1 to rule number 4 to 5. So that actually, if you go through any taxation book, if you go through the income tax website, if you go through the income tax department by the various type of laws and provision given there, this rule actually I have written in this way for your better understanding. My dear students, I am repeating this once again. If you go through any taxation book, if you go through the income tax website, this is actually not be the format of this set of rules. They are some having the underlying provisions, but for your better standing, so that for your better understanding, I am supposed to framing these rules in this way at my level best. So that let us understand. Rule number 1, loss from speculation business can be set off only against profit from speculation business. Now, my dear students, very, very important rule for your examination. My dear students, loss from speculation business can only be set off profit from speculation business. Now, your question may be, sir, we, as we have already seen in your previous slide, business, that is business A, business B, and now suppose you are discussing business clarification. One is speculation, another one is non-speculation. So now let me clarify it. What is speculation? As you know very well, stock market, that is share market. As you know very well, commodity market, that is commodity trading exchange. So if you are having stock market experience, if you are having commodity market experience, if you are having share or the stock trading experience, you can appreciate that one is called intraday trading service. Intraday trading service. So this is one type of speculation. So speculation means that is the settlement of price of shares or commodity without physical delivery of shares or commodity. I repeat, settlement of specifically shares or commodity, that is shares or commodity price, without physical delivery of shares or commodity market. So, sir, what does it mean? Suppose if I am telling you that just go to purchase, suppose X limited share for rupees 200 and a quantity of rupees 10, so that at present what you are supposed to pay quantity into price, that is suppose the market price is 200 and the quantity which you are supposed to buy it is 10, so that 200 into 10, that is 2000, but you don't have enough liquidity fund, so that you are having a short selling process. This is actually the foreign exchange market collaboration. That is a short selling process, that if you are having not enough fund, then you can easily be do with the short selling process in accordance to the stock market clarification. So at the end of the day, I repeat, in short selling process, at the end of the day, if share price is more than 200, at the end of the day, if share price is more than 200, suppose 210, suppose the market closing bell is 210, so that what is your profit? You have booked for rupees 200, but at the same time, at the time of market closing bell, it will be 210, so that 210 minus 200, so that what is your profit? rupees 10 per share. If you are having 10 share, 10 into 10, that is rupees 100. But at the same time, you are required to pay some negligible amount of margin. So that's a different thing in between option and swaps. There is an underlying market, that is underlying derivative, that is option and swap. So that this is called the speculation. Now, if price is reduced to 200, you have booked at rupees 200, but at the market closing value, it will be 180. So that you have made a contract. You have made a contract. So that you are supposed to execute your contract. That means you have booked for rupees 200, but the market closing is 180. So that what is the difference? That is said, my loss per share, it is rupees 20. So that if I am having 10 shares, so that 10 into 20, that is rupees 200. So that this is my loss from speculation business. I hope you will get the understand the idea. That is the what is speculation as well as the what is the non-speculation. So, sir, what is the non-speculation? Apart from this type of business, all these are the non-speculation. Because in non-speculation business, income tax department doesn't give this so much of the clarification. These are the speculation business. That is the what are the different kinds of business exist in the speculation one that has been given. So that apart from this, whatever be the existing business, that will be the non-speculation business. That is a textile, that is a grocery, that is a clothing, that is a different sort of business. So that loss from non-speculation business. Now just to see the several points. That is the second point. Loss from non-speculation business can only be adjusted profit from speculation as well as the profit from non-speculation business. I repeat this once again. If you are having speculation business, if you are having speculation business and you are incurring losses, so you can only be adjust if you are incurring profit from speculation business. That means what is the first rule? Profit from speculation business minus loss from speculation. So you can say, sir, loss from speculation business we cannot adjust to the other heads of income. No, sir. If you are incurring loss from speculation business, you can only be adjust profit from speculation business. But my dear students, is it every time possible that we are incurring loss and simultaneously profit? Maybe not. Most of the cases, this is not. In this year, I am incurring loss. In the current forthcoming year, I am incurring profit. So what about this year loss? So this year loss can be carried forward. So that this is called carry forward. I repeat, this year loss, that is loss from speculation, profit from speculation. If I do not have profit from speculation, this will be carried forward to the next assessment year. So that how much assessment year we will see in my later slide. So that I hope the first point is clear. That is loss from speculation business can only be adjusted with the profit from speculation business. But reverse is possible. That is my point number 2. That is loss from non-speculative business. If I am having loss from textile business, if I am having loss from textile business, so that what will be the adjustment if I am do not having any sort of non-speculation? If I am having loss from non-speculation, that is supposed to be textile business, I can adjust with the profit from speculation business. That means first one is not possible, but reverse is possible. That is loss from non-speculation business can be adjusted with the profit from speculation business as well as the profit from non-speculation business. I hope up to this it is clear to all of you, my dear students. Second is that means this is actually the rule synopsis. That is loss from non-speculation business can be adjusted with non-speculative income as well as the speculative business income. That means non-speculation business can be adjusted with non-speculative income as well as the speculative income. But this is the rule, this is the thumb rule. That is setting of loss. My dear students, setting of loss from the speculation business only be adjusted setting of loss from the speculation business, I repeat, only be adjust profit from speculation business. But reverse is possible. But reverse is possible. Now we will move to law or the rule number 2. That is loss from activity of owing and maintaining of racehorse. That means if I am having racehorse income, if I am having loss from racehorse, both the simultaneously, if I am having, as per the income tax department, if I am having loss from racehorse, simultaneously I am having profit from racehorse. So this loss, again I am saying, this loss can be adjusted only and with profit from speculation or the uh, profit from owing and maintaining of racehorse. For example, suppose I am having this year profit from racehorse rupees 1 lakh. Also, I am having this year loss from racehorse of rupees 60,000. So, profit from racehorse, that is rupees 1 lakh, and loss from racehorse, that is rupees 60,000. So that what will be my ultimate income from racehorse? That is profit from racehorse, that is rupees 1 lakh, minus loss from racehorse, that is rupees 60,000. So 1 lakh minus 60, that is rupees 40,000. And my dear students, there will be some little bit confusion about the said speculative business. Is it include owing and maintaining of the resource? No, sir. No, my dear students. Please make it confusion so that please make it clear that owing and maintaining of resource is not your speculation one. Speculation business as well as the owing and maintaining of resource, that's a different thing. That's a different thing. Because in some cases, my dear students, in some cases, you are having speculative business income. Please to listen very, very carefully, my dear students. You are having speculative business income, but at the same time, you are incurring loss from resource. So that you can say, sir, I am having loss from resource and I am having speculative business income so that I can easily adjust these losses. No, sir. No, my dear students. No. Speculative business and the owing and maintaining of the resource, both are the separate thing. Both are the simultaneous, not the thing. So that owing and maintaining of resource loss can be adjusted with profit from resource activity. I hope it is clear to you up to this rule number 2. Next, rule number 3. No loss can be set off winning from lotteries or horse race. Now it is again very, very important one, my dear students. That is the casual winnings is not available. Now, what does it mean? You have already got my slide because it has already been written. And thus I am telling you that is the background. What is my ultimatum to say? That is, no loss can be set off against winning from lotteries. Sir, if you are having loss from business, if you are having loss from business, now you're clarifying, sir, what type of business, whether it is speculative or whether it is not speculative. I am telling you, just to do a textile business, that is the non-speculative. Let me think a very clear and the precise one. If you are having non-speculative business, okay, sir, fine, and you are incurring losses of rupees 2 lakh, okay, very good. Now, at the same time, you have owned racehorse income of rupees 5 lakh. So, sir, can we adjust rupees 2 lakh with rupees 5 lakh? No. No. You cannot reduce your tax liability by this way. So, no loss can be set off against winning from lotteries and the resorts. If you are having winning from lottery, if you are having winning from resorts, and then if you are having loss from lottery or the loss from resorts, then you can adjust with the same rate. So, no loss can be adjusted. This is my rule number 3, my dear students. Next, rule number 4. Now again, these are one very, very important thumb rule. Long-term capital loss can only be set off against long-term capital gain. My dear students, it is very, very important point. You know, there are two type of asset. Or better you can say there are two type of capital asset. One is called long-term capital asset. Another one is called short-term capital asset. Now, if I am saying that is a long-term capital asset, suppose I am having one particular house. How it will be a long-term? If my holding period, is more than 24 months, because you know very well that in capital asset divided in two parts. One is called long-term asset, another one is called short-term asset. Now, under the long-term asset for the immovable property, that means land, building, etc. These are my immovable property. So this immovable property, if the holding period is greater than 24 months, my dear students, I repeat, is greater than 24 months, then you can say it is my long-term capital asset. But my dear students, in that case, I am also hold some shares, some stock, some debentures. So that is the same rule will be applicable? No. If it is a movable property, that is your stock, that is your shares, that is your debenture, that is your bonds. If it is a movable property, then you can say that your holding period, if it is greater than 12 months, I repeat, if it is a movable property in case of the long term, if it is greater than 12 months, then you can classify it the long-term capital asset from the shares. So now, if any long-term loss, how long-term loss will be incurred? Yes, sir, obviously it is being possible. I have purchased one particular house of rupees 30 lakhs. And after 2 years, suppose in a subsequent of 27 months, that is 2 years, 3 months, I have sold this house at rupees 15 lakhs. So I have purchased it for rupees 20 lakhs and I have sold it rupees 15 lakhs after 2 years, 3 months. So that it can classify with my long-term capital asset. Yes, sir. But I am incurring some losses. That is, sale consideration is 15 and my purchase price is 20. So sale minus purchase consideration. Obviously, we will get the index cost of taxation. That's the capital gain part. I am not discussing so much in this way. So that our main objective is what? That is how to set up these 5 lakh losses. Obviously, the cost of indexation will be there, but I am not discussing the capital gain. I am not discussing the cost of indexation. Actually, my objective is how to set up these 5 lakh losses. So that this is my long-term capital loss. And this long-term capital loss can only be set off with the long-term capital gain. If there is no long-term capital gain, no set off. It will be carried forward. So that it cannot be set off, just to see, it cannot be set off against short-term capital gain. If the holding period is less than 24 months in case of the immovable property, then it will be termed as a short-term capital. Suppose I am purchasing one particular land, I am purchasing one particular building, and within 1 year or that within 2 years, I have sold it. So that it will be less than holding period, it is 12 months. So that it will be short-term capital gain or loss. So rule number 4 is long-term capital loss can only be set off with the long-term capital gain. Now, as you can see, the purpose of set off, you can see what I have discussed. I am just writing in this frame. That is, long-term capital loss, I can only be adjusted with the short-term capital gain. Yes, sir. But long-term capital loss cannot be adjusted with the short-term capital gain. That's why it is cross. I repeat this once again. Long-term capital loss can only be adjusted with the long-term capital gain. Yes, that's why it is right. But long-term capital loss cannot be adjusted with the short-term capital gain. If I am having long-term loss, Simultaneously, I am having short-term gain. I cannot adjust. Because as per the income tax provision, it cannot be complied for. Number two, short-term capital loss. Sir, can it be adjusted? Yes, sir. My dear students, it can be adjusted with the long-term capital gain. So short-term capital loss, first you try to adjust short-term capital gain. If you are having, but if you do not have short-term capital gain, so simultaneously if you are having long-term capital gain, so that you can adjust. So short-term capital loss can be adjusted with the long-term capital gain as well as the short-term capital gain, but the reverse is not possible. But the reverse is not possible, my dear students. That means long-term capital loss can only be adjusted with the long-term capital gain. It cannot be adjusted with the short-term capital gain, even if you are having, sir, I am having short-term capital gain. Why should I cannot adjust the losses? No, my dear students. As per the income tax act, it cannot be complied for. But the reverse is possible. That is, if you are having short-term capital loss and that if you are having long-term capital gain, it will be adjusted. If there is no short-term capital gain also. So long-term capital loss can only be adjusted with the long-term capital gain. I hope up to this it is clear, my dear students. Next, rule number 5. That is loss from an exempt source. I have underlined. That is exempt source. You know very well under section 10, it is actually the exemption of the income. And one of the exemption of the income, you can say that is under section 10, that is the agricultural income to some extent of the rupees 5,000. That's a different thing. But loss from exempt source of income cannot be set off the profit of taxable sources. So what does it mean? You can see loss from agriculture income cannot be set off by the profit of taxable business. Taxable, I'm sorry, it is not taxable, it is a textile business. I'm sorry. So that textile business, that means a non-speculative. As you are already aware, there are two type of business. First one is speculative, another one is a non-speculative. Suppose the textile business, it is a non-speculative one. So that if I am having an agricultural land, and you know very well, whatever the income I have earned from the agricultural land, it will be exempted under section 10 AA. But to some extent that the whole land is used by the agricultural purpose. If it is a partially agricultural purpose or that it is a partially the industrial purpose, then the income will be bifurcated and that the various type of the law. But the thing is that if I am having the agricultural income, simultaneously I am having the agricultural losses. So first I do adjust my agricultural losses with the agricultural income. But the thing is that if I am not having the agricultural income, but I have incurred the agricultural losses, so that it can only be set off with the agriculture income. No other heads of income will be complied for. At the same time, long-term capital loss on sale on shares in the recognized stock exchange, that is exemption under section 1038, and you know very well that as per the financial year, that is 23-24, and the financial year that is 22 and 23, if I am having long-term capital gain from shares, it will be taxable 10% to some extent of profit of rupees 1 lakh. That means, what does it mean, sir? My dear students, if I am having long-term income from shares, if I am having long-term gain from shares, and if the amount exceed of rupees 1 lakh, then it will be subject to 10% of the taxability. But if suppose the long-term gain of rupees 90,000 from shares, I am not supposed to pay any taxes because it will be exempt up to rupees 1 lakh. So that this just we have written. My dear students, that is long-term capital loss on shares can be recognized with stock exchange against the long-term capital gain, the sale of the same house. Now, just you can see. Again, one summarized rule. Loss from let out house property of India. Profit of deemed to be let out. Now, what do you mean by deemed to be let out? If you go through the house property section, that is from the section 22 to under section 24, That means the profit of deemed to be let out, if you are having more than one house or that more than two house, the two house you can keep with your self occupied house property. But if you have do not have any sort of tenant or landlord is there, so that in that case the third house is to be considered as deemed to be let out based on the local area basis rent. And you know very well how do we compute the income from house property. We just recall the in 1 or 2 minutes. That is fair rent or municipal value, whichever is higher restricted to standard rent. It is called reasonable expected rent. And this reasonable expected rent we supposed to consider with the annual realizable rent, considering the unrealizable rent and the vacant period, so that we will get the gross annual value followed by subsequent deduction of the municipal tax. Then we will get the net annual value. Then we will get the two type of deduction, that is standard deduction of 30% of net annual value, and if we are having any interest on loan under section 24B, then we will get out of this maximum 2 lakhs. So that if I am having any loss from house property, as a students, just to think about it, how a loss may be incurred from house property. Suppose I am having one house and this house is used for my own residence. This is called self-occupied as per the income tax knowledge. And still I am telling you that is I am having loss from house property. Why? Your answer will be, sir, if you are taking one particular type of loan for your house property, we will get the subsequent deduction of interest on loan under section 23B. Yes, under section 24B, that will be the subsequent interest on loan of rupees 2 lakh. And this loan or this interest on loan will be the loss from house property, so that it can be adjusted with the profit of deemed to be let out house property. Simultaneously, loss from speculative business. Profit of leather business. Leather business means the non-speculation. That will be not applicable. That is, it is gross. Loss from agricultural activity outside India. Income from debentures. Debentures means that is a debt. That is a debt capital. That is a loan capital. That is a borrowed capital by the company. If you are supposed to invest one debenture of a particular company, we will get the fixed interest. That's why debentures or the borrowed capital is called fixed interest bearing securities. Next, so that up to this we have considered intra-head adjustment. Now we will move to the inter-head, that is under section 71. So under this section, loss cannot be set off. If the loss cannot be set off under section 70, then we will move to the second heads of income. Suppose just we have discussed, if we are having loss from self-occupied house property, but said we do not have any other type of house to set off this loss. So my dear students, don't worry about it. Definitely you are having the other source of income. Yes sir, I am having salary income, I am having non-agricultural income, I am having interest from income, I am having income from other source, I am having capital gain income. Okay, so that this loss from house property can be set off with the other heads of income. So that which heads of income we will clarify it later. So that inter means different heads. That is under section 71. And now loss can be adjusted with the any heads of income. That means loss from house property, any heads of income. No, my dear students, there will be some little bit provision. What will be the provision? You can see here, just a sum we have given. That is, profit from business A, it is 70,000. Okay. Loss from business B, it is 2,90,000. And income from house property, it is 5,10,000. I repeat, the question is very, very easy question. Actually, it is. Profit from business A, it is rupees 70,000. Loss from business B, it is rupees 2,90,000. And income from house property, it is 5,10,000. So, sir, what will be your total gross total income? And you know very well that gross total income is the aggregation of the 5 heads of income, that is salary, that is house property, that is PGBP, that is capital gain, and the other sources. Clubbing of these 5 heads of income, we will get the gross total. So here, business A and business B, let it be considered as a non-speculative, because if it is a speculative, it is clearly mentioned in the question. Business A and business B, let it be considered as a non-speculative. So that profit from business A, it is 70,000. Loss from business B, it is 2,90,000. And income from house property, it is 5,10,000. So now, first, how do you answer this type of the questions? So first, you can adjust, that is profit from business A with the loss from business B. I repeat, profit from business A, that is with the compliant with the adjustment of the loss from business. Now you can say, sir, profit from business A is not sufficient to meet up the loss from business B. Obviously, it is 70,000 and loss from business B, it is 2,90,000. So that how can it will be meet up? So that don't worry about it. So profit from business A is how much? You can just see the solution. Profit from business A, it is 70,000. And loss from business B, that is same head of losses. Just to remember, students. Just to remember, same head of losses. That is under section 70. That is called intra-head. That is intra-head. So that loss from business B, that is 70,000. So first of all, your total business income is how much? Nil. So just you see, you must do appreciate this provision. And you must do appreciate this type of the activity. That means your profit from business A is 70,000 and your loss from business B is 2,90,000. You can easily adjust 70,000 from business B and your total business income will be nil. At the same time, your income from house property is how much? 5,10,000. But loss from business B, how much it will be set off? 70,000. What is the total loss? 2,90,000. So that what is the residual one? That is 2,90,000 minus 70. That is 2,20,000. It will be adjusted with the other heads of income. That is intra-head. Under section 71. Intra-head. 5,10,000, that is income from house property, minus set off of business B, 2,20,000. So what is your gross total income? 2,90,000. So just you see the benefit of this set off of losses. Next. So we are just defining some sort of rules under the section 71. Just we have seen the under section 70 rules. These are the rules complying with the under section 71. See, loss from speculation business cannot be set off any income from other head. Definitely, sir. Under section 70, if we are having profit from speculation, then we are supposed to set up the loss from speculation. But if I do not have profit from speculation, but simultaneously I am having loss from speculation, so this loss from speculation we cannot be at the later will be, it will be carried. So loss from speculation business cannot be set off against income from any other head. So rule number 2, profit from business or profession cannot be set off income from salary. My dear students, it is very, very important one. That is profit and gains from business and profession. That is, if I am having loss from business, sir, I am having also my salary income, so that I can easily adjust the same with my salary. No, sir. No, sir. That your business loss cannot be adjusted with your salary income. Next, rule number 3, that is the thumb rule number 3. Loss from activity owing and maintaining of resource can only be adjusted with the income from same business. That means if you are having the same income, if you are having the same head, if you are having the same business, that is the income from owing and maintaining of the resource, so that you can easily be available of the loss from owing and maintaining of the resources. Rule number 4. Any loss under the capital gain cannot be set off to the any other head. My dear students, it is very, very important. That is, if you are having long-term or short-term capital loss, if you are having long-term, you are supposed to adjust with the long-term capital gain. But if you are having short-term capital loss, first you do adjust with the short-term capital gain. If you do not have short-term capital gain, then you must go to the long-term capital gain. But if you do not have long-term capital gain or short-term capital gain, but you are having simultaneously the short-term capital loss, then my dear students, this short-term capital loss cannot be adjusted with the any other heads of income. It will be simply the carry forward. How many years will be carry forward? We will see in my later slide. But just to remember, long-term capital loss and short-term capital loss can be adjusted with the capital gain. No other heads of income will be allowed to set off the same head of the losses. Correct? Next. So that just you can see that is loss from capital gain. No any other heads of income, just it is being crossed. Loss from the head of house property? Yes, sir. Long term and short term capital gain. You see, capital gain can itself adjust the other losses. You just appreciate, my dear students, you just appreciate that capital gain itself set off the other losses. But capital gain loss cannot be set off with the other heads of income. So that it is actually complied by the income tax department. Okay, so that we are very much complied with the income tax department, and we are supposed to appreciate because we are supposed to reduce our tax liability by adjusting of losses. Next one. So rule number 5, no loss can be set off against winning from lotteries, crossword puzzle, card game, horse race, betting, that is the casual income, that is the etc. Next, loss from non-speculation business. Loss from non-speculation business, my dear students. Loss from non-speculation business means what type of business? Suppose textile, suppose grocery. If you are having loss from non-speculation business, but at the same time you do not have profit from non-speculation business, so you can adjust with the profit from activity of owing or maintaining of resource if it is applicable. But the reverse is not possible. That is the loss from speculation business, my dear students. My dear students, if it is a loss from speculation business, so profit from activity of owing and maintaining of resource cannot be applicable. Suppose I am having the intraday trading, that is the commodity speculation loss, but at the same time I am having profit from activity of owing and maintaining of resource, so that I can easily be adjusted. No, sir. No, sir, you cannot be adjusted because this is a speculation business loss. So this speculation business loss cannot be adjusted. Next is the UAD. UAD means unabsorbed depreciation. What will be the unabsorbed depreciation? It will be clarified in my later slides. There is the unabsorbed depreciation. That is long-term capital gain you can adjust. So now you can see this is actually be the structure. This is actually be the nutshell of this carry forward of losses. I have just precise with a very small one, right? That is house property loss, same set of house property income. Obviously, if you are having house property loss, if you are having house property income, so that why you are supposed to go there at the other heads of income if it is sufficient to meet up your loss. That means house property loss. Obviously, first we will move it to the house property income and then followed by the other heads of income. And then you can see the carry forward. You can see the carry forward, that is rupees, that is 8 years. I'm sorry, that is 8 years. That means if you cannot, so that what do you mean by carry forward? Now you can ask me, sir, what do you mean by carry forward? Carry forward means so far we have discussed that is a set off. But remember, I have only one house property. I have only one house property and no other income I am having. So if I am having one house property and if I am supposed to incur the losses, and if I am having no other income with the same particular financial year, so that it will be carry forward up to 8 years. That means in next forthcoming financial year, if I am having income from house property, then I can adjust the previous financial year house property loss. At the same time, business loss. Business loss can be adjusted except salaries. Business loss means business income that is speculative and the non-speculative. Speculation loss not allowed and it will be carried forward up to 4 years. STCL, short-term capital loss. It will be carry forward up to 8 years. And only the capital gain, that is long-term capital gain and short-term capital gain. I am trying to show that is the very precise one. That is the synopsis that what we have discussed in the nutshell activities. Loss from owing and maintenance. Oh, sorry. Long-term capital gain. Sorry, I have missed the one now. That is the long-term capital loss. It will be not allowed, but it will be carried forward up to 8 years. That means if I am having long-term capital gain, if I am having long-term capital loss, I can easily adjust with the long-term capital loss with the long-term capital gain. But the thing is that if I am having long-term capital loss, but simultaneously I am not having the long-term capital gain, so that it can only be carried forward up to 8 years. Loss on maintenance of resource cannot be adjusted with the other heads of income. Carry forward up to 4 years. And unabsorbed depreciation, there will be no time limit. It will be carried forward to the indefinite period. So this is the summary of rules. So before I start the sum, this is the summary of rules that what we have discussed in my previous slides. That is, income from house property can be adjusted. That is salary, business income. Actually, it is not income. This is the head. That's why I have written that is the income from house property. Actually, it is the income from house property. That means the loss from house property. That means salary, that is business income, capital gain, as well as the income from other sources. If I am having loss from speculation business, I can adjust with the income from speculation gain, or that income from speculation business. If I am having non-speculation loss, that is the non-speculation business loss. That means I am having income from house property, I am having capital gain, I am having income from other sources, so that I can adjust the non-speculation business loss. Right? So the long-term capital loss can be adjusted with the long-term capital gain. Short-term capital loss can be adjusted with the long-term capital gain as well as the short-term capital gain. And the income from other sources can be adjusted with the salary, house property, business increment, capital gain. Now, my dear students, that is what will be different head consideration on the income from house property. Sorry, income from other sources. I am having a crossword puzzle income. Is it also income from other sources? Yes. I am having income from resource. It will be also be a other sources income. I am having winning from lottery. That is also be the other sources income. So that this loss, if I am having loss from resource, if I am having loss from crossword puzzle, if I am having loss from lottery, then it cannot be adjusted with salary, it cannot be adjusted with the house property, it cannot be adjusted with the business income, it cannot be adjusted with the capital gain. So that what type of losses? Suppose I am having interest on bank deposit, suppose I am having interest on savings bank, suppose I am having interest from debenture, so that can be adjusted. So this is the summary of rules. Now the carry forward. So the loss cannot be set off against income of any assessment year. It do not lapse. That means you are not allowed to see. But suppose what is actually the thing is that if you are not allowed, or that if you are not compatible to set off this loss with the current heads of income, don't worry about it, my dear students. It will be carry forward. But how many years? That's our previous slide. So the carry forward, first same head of income, then the other heads of income. Now we will move to the under section 32(2), that is unabsorbed depreciation. So that what is the concept of depreciation? Why should we charge the depreciation? Because as you know very well, my dear students, that is depreciation actually is a charge against profit. Whatever the depreciation you were supposed to charge, that your profit amount will be reduced, and that whatever the profit amount will be reduced, that is your tax liability will be reduced. That is the main thing. That is the main thing from business, my dear students. But suppose what will be the unabsorbed? Let me give you one example. Just to listen me very, very carefully. If you are having gross profit of rupees 2 lakh, if you are having gross profit of rupees 2 lakh, now your depreciation is 2 lakh 20,000. What's your depreciation? 2 lakh 20,000. Your gross profit is 2 lakh. Maybe your depreciation is much more than the gross profit. Is it be possible? Yes, sir. It may be possible. So that your depreciation is 2,20,000 for a particular business. So that what is your net loss? I am not net profit, that is net loss. 2 lakh is my gross profit, and uh, my depreciation is 2,20,000. So my net loss is 20,000. So this 20,000 loss, what will be termed? It will be termed as an unabsorbed depreciation, because this 20,000 will be income from the depreciation. This 20,000 will be incurred from the depreciation. So this is called unabsorbed depreciation for a very lucid example. So now what will be the treatment? So the treatment of unabsorbed depreciation, first to set off against the profit from business. Now, my dear students, you must be appreciate that when depreciation will occur, if you are having if you are having one particular type of business, and then in business you have used some particular type of assets, suppose plant and machinery, suppose furniture, suppose the different types of tools, etc., etc., and you are charging some sort of depreciation, so that by charging of depreciation you are supposed to reduce your profit, so that by reducing your profit you are supposed to reduce your tax liability. But the thing is that if we are having any unabsorbed depreciation, as per our recent example, so that it will be charged any set of profit from other business, and that interhead, it can be set off with the income from other heads except from salary and casualty. And this unabsorbed depreciation can be carried forward with a no time limit. If it is 5 years, 10 years, 20 years, 15 years, unless and until it will be settled. So that this is the main rule thumb of the depreciation. So this is the orders and priority. Suppose if an SSC has income from business, so first current year depreciation, this is actually the order of priority. Current year depreciation, if you are having textile business income, if you are having textile business gross profit, so that what is your current setup, or that what is the sequence, or that what is the priority? Current year depreciation, current year capital expenditure on the scientific research and family planning. You know very well, under the PGBP there is a one particular section, under section 3580, there is a scientific research expenditure. There is the in-house research as well as the out-house research. So that's a different thing from the PGBP side, right? Then the current year loss from any other business, brought forward, that is number 4, brought forward business loss if any, brought forward unabsorbed depreciation as well as the unabsorbed capital expenditure for the scientific research and private plan. So that out of this type of the subtraction, you will get the final income from business. So now these are the carry forward section, that is the income from house property, just we have discussed. That is the future income from the house property, and that if I am not having any sort of income from house property, it will be carry forward 8 years. Just you see the example 1. If the loss relate to assessment year 12-13, it will be carry forward up to 8 years. That is assessment year 20 and 20. Right? So now at the same thing, this is one particular example. That is just we have written. That is the profit from business A and the setup of business B, and then income from house property and the setup of the loss from business B. Just we have shown. Right? So now this is one particular sum. Mr. X has the following incomes and losses for the previous year 23-24. Income from business A, it is 1,80,000. Loss from business B, it is 62,500. Income from house property 1, it is 84,200. Loss from house property 2, it is 30,000. Short-term capital gain, it is 25,000, and long-term capital loss, it is 22,382. So that you are requested to compute, my dear students, that is the gross total income of Mr. S for the assessment year 24-25. So now business A, business B, probably you will be in a dilemma. That is said, one thing is that you have not stated what type of business it is, what type of the business category of business A and business B. So, my dear students, get rid of this dilemma. That is, when the question is not being specified, that is the speculative business, so that we will take that is a non-speculative business. If it is a speculative, it will be definitely be specified. If it is a speculative, then it will be definitely be specified. But if it is not mentioned, so that just to consider as a non-speculative business. So that income from non-speculative business, loss from non-speculative business, income from house one, loss from house two, short-term capital gain and the long-term capital loss. So just you see how to solve this sum. See, this is the solution. Just to understand it. So that this is the main heading, that is the computation of the gross total income of Mr. X 24-25 relating to previous year 23-24. I have written all this type of segment and then I try to cover all this type of segment in this solution. Right? So that just you see computation of gross total income. So just you see the question. Income from business A 1,80,000. So I have written here that is income from business A 1,80,000. Now your question is, sir, why 1,80,000 is written? Because the sequence one, salary, house property, PGPP, capital gain, other sources. You should have to maintain the sequence when you are supposed to compute the gross total income. When you are supposed to compute the gross total income, you are supposed to maintain your sequence. That is the salary, house property, PGPP, capital gain, and the other sources. So first you need to find out that is there any house property income? Is there any salary income? There is no salary income, but sir, there will be the house property income. That is income from house property 1 and loss from house property 2. I am highlighting with my cursor. Right? So just you see, income from house property 1 is how much? 84,200. And the loss from house property 2 is how much? That is 62,500. So that just you see that loss from house property 2, it is uh, I'm sorry, I'm sorry, that is the loss from house property 2, it is 30,000. I'm sorry, that is 62,500 is a business, it is a business loss. So that income from house property 1 is 84,200 and the loss from house property 2, it is 30,000. So that just you see, that is income from house property 1, it is 84,200 and the loss from house property 2, it is 30,000. So that what will be the subtraction figure? So that after the subtraction of 30,000, we will get the net income from house property, that is 54,200. So that this is 54,200 and this will be the final outer column, right? Next is the income from business A. It is 1,80,000 and the loss from business B, it is 62,500. So that just you see, that is income from business A, it is 1,80,000 and the loss from business B, it is 62,500. So that just the subtracting of the 1,17,500. Clear? Now you see the question. I am just correlating. Long-term capital loss 22,382 and short-term capital gain, it is 25,000. Now, my dear students, just to remember the rules, here we are having short-term capital gain and also we are having, just to present my slide, and also we are having long-term capital loss. So short-term capital gain is how much? Short-term capital gain, one second. Yes, short-term capital gain is 25,000 and long-term capital loss is 22,382. So just you see, short-term capital gain I have written, but long-term capital loss I have written nil. Why? Because long-term capital loss can be adjusted with the long-term capital gain. If you do not have long-term capital gain, then it will be carried forward to the next assessment 8 years. So just you see the note. Long-term capital loss can be set off. Just you can see long-term capital loss. Long-term capital loss can be set off against long-term capital gain. If not, it will be carried forward up to 8 assessment year. It will be carried forward up to 8 assessment years. So that in this question, I am not having the long-term capital gain. I am having only short-term capital gain. Just you see, I am having only short-term capital gain, but I do not have long-term capital gain. So this long-term loss can be carried forward up to 8 assessment year. So this is a very, very important provision under the set off. Now we will move to our second type of sum. Mr. Y, first sum is Mr. X, second sum is Mr. Y. Mr. Y has the following income and losses for the previous year 23 and 24. There is a salary income of 3,60,000. Loss from textile business is 2,85,000. Profit from grocery business it is 1,20,000. And income from house property it is 85,000. So I am having salary income, I am having textile business loss, I am having grocery business income, and I am having income from house property. So that how do you solve the sum? So just you see. Income from salary it is 3,60,000. No other income or the no other heads of income will be adjusted here. Next, income from grocery. Just you see. What will be the income from grocery? Income from grocery business is 1,20,000. I am highlighting with my cursor. Income from grocery business is 1,20,000. Now, what will be the loss from textile business? 2,85,000. But is it sufficient to meet up, my dear students? My dear students, is it sufficient to meet up? No, sir. So what we will do? So we can do income from grocery business. So just you can see. So that just you can see that is income from grocery business. It is 1,20,000. Loss from textile business. It is 1,20,000. So we are having loss. How much? 2,85,000. Just you see. We are having loss of 2 lakh. Please to understand the concept. Please to understand. We are having loss how much? 2,85,000. But we can only adjust 1,20,000. So that what is the residual loss? 2,85,000 minus 1,20,000. That is from the business. That is 1,65,000. Now we are having income from house property. That is 85. So again it will be not sufficient to meet up. So that we can see that is loss from textile business. It is 85,000. So loss from textile business it is 85,000. So again we can see the note. Just you see, loss from textile business is 2,85,000. So first we will adjust the profit from grocery. Then interhead setup. Interhead setup means my dear students. My dear students, interhead setup means that is income from house property. And if it is remain unadjusted, how much? First 1,20,000. So 2,85,000 minus 1,20,000. How much it is? 1,65,000. Out of 1,65,000, how much we can adjust with the income from house property? It is 80,000. So 1,65,000 minus 80,000. How much it is? That is 85,000. So this 85,000 we can carry forward to the next assessment 8 years. So that this next assessment 8 years. Now again, sum number 3. Mr. A has the following income or losses. Income from non-speculation business. Income from speculation business. Now this is the sum number of category number 3. Income from non-speculation and income from speculation. Income from bank fixed deposit. Loss from non-speculation. Loss from speculation. Contribution to PPF, that is under section 80C, and contribution to Jela Shiksha Samiti, that is the donation, that is under section 80G. So that these are the two type of deduction. That is contribution to PF, that is the PPF, that is the public provident fund, that is 15,000. This will come under section 80C, that is the deduction under section 80C to 80U chapter 6A of the Income Tax Act 1961. And the donation to Jela Shiksha Samiti, that is under section 80G, that is the donation. That is the 100% qualifying limit. So what will be the net taxable income? So just you see, that is the income from business minus brought forward of loss of the non-speculation. That is income from non-speculation business, loss from non-speculation business we can adjust. As you see the question, just you see the question. Once again, 1 minute. 1 second. That is income from business. Just you see. Income from business. Non-speculation. How much? 235,700. Just you see. I have written income from business 235 700. Clear? This one 235 700. Okay. This one 235 700. And the loss from business, you can see here, there is a loss from business. How much it is? Loss from non-speculation 1 lakh 2200. So just I have subtracted from 2 lakh 35 700 minus 1 lakh 2200, that is 133 500. Then income from speculation business, just you see, that is income from speculation business, that is 87,300. And then again loss from speculation business, see this one 95,200. So the what is the income? 87,300 and the loss is 95,200. So that I can only adjust up to 87,300. That is 87,300. So that it will be nil. So that what will be the residual? You have incurred losses 95,200, but you can only adjust 87,200. So that the residual one, it will be carry forward because I have no other income from circulation business. Then income from other sources, that is interest from bank deposit, less chapter section under section 80C 15,000, less under section 80G 100% taxation limit. So it is 2,33,700. So that these are the three categories of sum which are very much important under the taxation. So just to sum up, that is carry forward of loss up to the 8 assessment year, carry forward of non-speculation up to the 8 assessment year, and carry forward of the capital gain if it is a long-term capital gain. If it is a long-term capital gain, if it is a short-term capital gain, then it will be move on to the up to the 8 assessment year. And then loss from speculation business, it cannot be adjusted, rather than it will be adjust only the speculation business income. So with this, I am concluding my slides under the set off and carry forward of losses. Over to you, sir.
Thank you so much, sir. It was really great session. Thank you so much again for your lucid explanation on set off and carry forward losses. Undergraduate students will surely develop their in-depth concept on set off and carry forward losses from this lecture. It was really excellent and to the point presentation. We entire organizing team of Kolkata Bidhannagar Society of Academic Advancement want to thank you for giving your precious time to us out of your busy schedule. Thank you so much, sir. Thank you.
Thank you, sir. Thank you. First of all, I will like to express my sincere gratitude to the Kolkata Bidhannagar Society for Academic Advancement, that the president, sir, that is the Professor Dipti Kumar Chakraborty, as well as the Lama, sir, that is the Professor Pema Lama, sir. That means so much giving me this opportunity. That means I am very much honored and privileged, as well as the very much. That means my deepest gratitude that the very special type of program for the undergraduate student for the betterment of there. So the thank you, sir. Thank you for giving me this opportunity. Thank you, sir.
Thank you so much, sir. We will come with new surprises as our Pema Lama sir has said. So it will not stop and it will continue to give new surprises for the students and new
Yes.
generations. Okay.
Yes.